All right, guys, let's take a look at a basic example of what we mean by bracketing versus trending markets. Now, the reason I want to almost annotate this for you is to just show you how the markets don't, simply stop and then, go sideways and then trend again. There's very important key identifiers that will move us from bracketing into trending and vice versa. So, very basically, what do we mean by bracketing? Well, as markets move up, we see a little bit of initiative. We then run into a little bit of responsive selling. The market then starts to rotate over. Those buyers then get out of those long positions and sell. That takes the market lower until we run into, again, responsive buyers. And we continue and continue and continue. Now, remember, markets can bracket or move sideways for a lot longer than you think. In actual fact, markets tend to move sideways for very, very long periods of time. Now, one of the key things that will, can obviously shift us from, a bracketing to a trending market is a shift in fundamentals. Now, what you have to ask yourself is how often do we get, very big fundamental shifts? Now, what I would say to you is, in my career, in the early years, we had the European crisis and, we had all the central banks cutting interest rates and, there was a lot of panic around, would Europe continue to exist? So, back in those years of, 2010, 2011, 2012, there was a high tendency for a lot of trend in the markets with, very brief periods of bracketing. But that then in 2013, 2014, 2015, stopped. We saw most markets move into bracketing type price action. Now, fundamentals is one of the key factors that can obviously shift us from bracketing to trending. Another key factor is when we have very key technical shifts. Now, what do we mean by that? Well, if, for instance, we take an example, we look at the euro-dollar index, and we can see that, since late 2014, we've had this really strong rally in the euro-dollar index, and we had this initiative, type trend, and then the market started to bracket. And then all of a sudden, since the Donald Trump victory, we've started to see that trend continue. So the second type of main reason or cause that we get a market moving from bracketing to trending would be very key technical breaks. Now, what do I mean by key technical breaks? And this is important to understand. I don't mean daily market moves. I don't mean little bits of volatility in the markets or pockets of noise. I mean very strong initiative signals sent by the market where day after day after day the market holds that break above this consolidation, and maybe even 1 or 2 or 3 weeks we hold that break, almost like the market saying, well, we've moved away from where we thought fair value was, and we feel now that the trend needs to continue. So that's what we mean by a key technical break. It's the point where the technical structure of the market brings bigger time frame players into the market. That's the two key reasons or ways in which we move from bracketing to a trending market. So let's just illustrate now and finish off, just in terms of how it would work and what causes us to move from bracketing to trending. So as you can see in this initial example, the market is bracketing. Now let's say we get a key piece of fundamental news in this market that drives us outside of the bracket. Now the first point you have to pause, first point you have to look at as a trader is that juncture point there, that key break. What occurs in that area? That's one of the most important things to interpret, because you need to understand, is it initiative taking it through there? Is it merely the buyers that are long, that are liquidating, that's taking it lower? Or is it fresh new business coming into the market that's taking it lower? Okay, understanding and interpreting that basic principle will then allow you to interpret whether or not we continue in that direction, whether we continue aggressively in that direction, whether we grind in that direction, or whether we turn back around and aggressively reverse. Okay, so the important thing to understand is what we should see. The expectation is that we should see some initiative selling at this area. In other words, new business. So with initiative selling, we would most likely see a very directional type move. Okay, so straight away, you've got to cotton on or look at how the market responds in this area. Does it look like initiative, or does it just look like sellers, that are half-heartedly committing to lower prices? In which case, maybe we get the grind type phase, or equally, we just get a stop run and the market turns back around and continues to bracket. Now remember what I said, guys. When a market does bracket and trend, if we do then reverse up higher, it's highly likely we find new ground to the upside and then continue to do the same thing higher up before the market then either moves higher or back lower again. Let's just finish off and wrap up. Remember, markets trend, say, if we were to do a relative study, markets are trending roughly 20% of the time relative to the 80% of the time they bracket. Now, the important thing to understand is that when you're employing your strategies, are you employing momentum strategies? Are you employing fade strategies? What strategies are you utilizing? And how are you going to implement them differently in, say, a bracketing market or a trending market? That's the wrap up and the end of our example. I hope you've enjoyed this.